We've got Devang Mehta, who's Vice President and Head of Equity Sales at Anand Rathi Securities. He joins us now in the studio. Now, Devang, we've just got, 3 weeks left for the end of this year. Do you believe that, what we've seen play out in the equity markets over the last 3 to 4 weeks can hold up and actually sustain over the remainder of the calendar year, or do you believe that we're going to continue to see consolidation?
Good afternoon, George. We strongly feel that probably this rally can last till some time to come. But presently, in the very short term, I think the market has rallied brilliantly. Also, if you see year till date, Nifty has rallied around 26-27%. So I think there are all chances that market may consolidate at the current levels, and having a bottoms-up approach and having a stock-specific approach at this point would help, because overall the larger sense is that the market seems to be a little tired at this point. So I think stock-specific ideas could do the trick over the next coming 2-3 months.
Devang, while we might see a good up move in the markets, and you were talking about a bit of consolidation, what everyone's really worried about is what the earnings season is likely to throw up, and that in turn impacting the up move that the markets are likely to see. What's your expectation?
In fact, on the earnings front, we feel that a lot of bad things have been seen in the last quarter. So I think maybe on a quarter-to-quarter basis, there may be a little bit of growth which could be seen in a lot of companies, and we strongly feel that the consumption sector will still keep on doing well, though the valuations are a little expensive here, because there is no signs of capex that is going to happen in the next 6 to 9 months, because nothing has much change on the ground situation.
So, Devang, in terms of the earnings season, which do you believe the problem sectors are going to be, which are going to continue to face stress even when they put out their Q3 numbers?
I think probably metals and PSU banks, I would point out, could still be showing a little bit of bad numbers, and amongst them also it would be a little bit of a stock-specific approach. But probably prima facie we feel that public sector banks and metals would be still having tough time.
Devang, what did you make of the NMDC offering at 147? Do you think it looks attractively priced?
Yes, we do think that on a valuation standpoint, the stock is at attractive valuations at this price point around 147, and at 150, 155 also, if a larger bids come in at that price, I think it's a sort of value for money. And I think over the longer period, GMDC and NMDC, both these stocks could do very well.
What's your view on the overall auto sector? Because, I mean, post the festive season, there was a bit of a slowdown in the overall demand. Do you see that picking up?
We see the demand being good for the next 1 or 2 months, and again probably the depreciation effect that a lot of people try and take in the months of February and March. 2-3 months can be good, but overall I was reading Maruti's comments about single-digit growth that is envisaged for the next year, plus the price hikes that they are in fact trying to take probably would increase their margins, but what would happen to the volumes is anybody's guess. The new launches from the stable of probably Maruti, Tata Motors on the international front, and M&M would be keenly looked at, and I think we would strongly favor the four-wheelers rather than two-wheelers.
We had a brokers poll which was recently conducted, and in terms of sectoral preference, financials featured on the top of the list, backed by infrastructure and media. In order of preference, rank how you would put these 3 sectors.
In fact, I would also go with banks being the top pick, and among banks, as I said, the approach would be more of stock specific. We would like the private banks still. Among them, the smaller banks like Karur Vysya, ING Vysya, we keep on liking this, and they have surprised us on the positive side. Media would be another sector which is still going to do well over the next 2-3 year period, post digitization, and also the next phase of digitization which is taking in 38 cities. Hathway Cable and all these companies would be major beneficiaries, and I think infrastructure, if somebody has a 2-3 year horizon, there are very good stocks to pick up. Stocks like L&T, BHEL, I would play in the infrastructure space for that, but the horizon should be at least 2-3 years.